you. So my name is Anthony Amacucci. I work for TSIB, Turner Surety Insurance Brokerage, and we are a construction-focused insurance brokerage. We operate nationally. Our focus really is large, publicly funded construction projects. So as Andis mentioned, One Brooklyn Health Systems, we're the broker for One Brooklyn Health. We're also the broker at the Jacob Javits Center in the city. So two projects I'm sure you're familiar with, and they've got participation goals. So not only are we focused on creating the big programs that cover the owners and the GCs, but we are tasked to help them, much like Andis, find quality MWBEs, qualify them and recommend them, connect them to the right size contract, et cetera. So that's really, what we're excited about. The purpose, the agenda, I guess, for the presentation today and for this whole seminar, this series really is to do two things. The first portion is going to be to get you to understand how the insurance marketplace operates, each layer of it, who the players are, how each of them impacts you, the large trade subcontractor. So, and then at the second session, we'll focus more on ways to manage your cash flow, tips and tricks for your financing agreements, and just kind of how to utilize different projects to, free up cash flow. That's really what the most important part is. And then we're going to wrap up the whole session with the whole series with LF Driscoll to talk about their contract at OVHS and specific things you need to do to connect with them on that project. So yeah, we're excited to be here, and we want to make sure that this is an interactive, discussion. So we'll take pauses after each of the slides, and we'd like to engage and answer any specific questions because, less definitions of insurance, more real world understanding to really get you to understand what you need to do today to create and manage the best program long term. So with that, I think we can get into this PowerPoint here. I'll share my screen. Is that good? You give me a thumbs up, Ryan? Okay. Andis, you want to get started?
Sure. So I've been working together with Anthony's team for quite some time. And one of the things we learned was that a lot of the work that I do as an independent compliance officer, outreach and good faith efforts, meeting MWBEs, learning about their services and their scope of work and their capacity, is in alignment with the work that TSIB does. They have a 50-person service center that manages the insurance programs on a lot of projects. And they do very similar activities. They'll email you, they'll call you, they'll follow up. And we realized by working together, we could really spend more time, less pro forma, and more work on one-on-one hand-holding and growth and development. So I've learned in my experience working for large CMs over the course of time that these companies have come to where they are, have resources that sometimes small businesses don't have, whole risk management centers that help them decide when to bid, what to bid, and how to bid. And we've learned that if I spend less time doing the emails and the phone calls, I can spend more time working with Anthony on putting real skills into the hands of people that may not have access to those resources. So this is the first of a risk management series we're putting together, concentrating on insurance. I know when I worked for large CMs, no decision to bid was made unless we got buy-in from the risk management department. And Anthony's going to give you some tricks in the trade, some tricks of the trades, what his clients are looking for when they're reviewing your insurance policies, and then how to have access to a policy coverage that's comparable.
Great, thank you. So today we're going to start with reviewing the state of the market, the hard market that we're in today, understanding the players, how, to get what you need from them is really the key. What goes into a top shelf submission? We will touch on working for a general contractor, the two methods of insurance that they use: contractual liability, which is just traditional risk transfer, or OSIP or CSIP insurance. What the insurance requirements are from a very basic level, and what to expect from your broker. The more, MWBEs that we meet, particularly the emerging ones, we find that they just don't know the right quality of broker to help them in this New York world. So I'm going to give you guys some specific questions and just things that you should expect from an everyday basis. And hopefully all of this, and again, less coverage specifics, more real world knowledge. I feel that that's important. But ultimately at the end of this, you'll be able to create a plan that you and your broker together can go, to build your program for a multi-year phase. So that's what we're going to try to get everyone to understand by the end of this presentation. State of the construction market, it is chaos. The hard market is in full swing. So what exactly does that mean? In late August, I'd say 2019, we were starting to see just increases across the board on excess policies. 15, 20% when people were not having any negative claims or anything at all. So when you think of these insurance carriers, they're making their money in two ways: from underwriting profits and from investment income. So when they start losing money on the underwriting side, they tighten up their rates and they limit the amount of capacity that they're allowed to write. So now, when you look at a place like New York, which is driven entirely by labor law, the only state in the country that still has labor law in effect, which just makes the amount of claims, the frequency of claims, and the severity of claims significantly higher than any other state. So in New York, the hard market is felt the hardest. And we were the insurance carriers, the insurance industry was in a hard market on its own. Then when you couple in wildfires and the fact that this was the most active hurricane season in American history, and COVID shut down the economy. So they're paying out just on claims that are catastrophic, and they are planned for to some extent, but not planned for sufficiently to cover it all. So all of this is kind of coming together right now for 2021, and it's going to cause, we are prepping our clients to be prepared for 30% increases. Anything less than that is kind of a home run. So it is a bit kind of scary to hear these things, but it's important to know them and not to underestimate it, and to be prepared for it and to have a plan for it. Because when Anthony and I, go ahead.
30%, when this is what the minority and small businesses are already paying, a high percentage of whatever their overall overhead costs on insurance was already a monster.
Yeah, it's very troubling. This is why, and we'll get to this a bit later, but when we think about, and we've been having a lot of discussions about this internally at TSIB, because we're buying, in an annual period, we're buying $20 billion a year in construction insurance. So, these underwriters we're privy to this information on a fast basis. So where our clients are getting these huge increases, 20, 30%, and they manage their business well. They don't have a lot of claims. So it's going to be It's going to be tough. We're going to see a lot more OSIPs and CSIPs. That benefits everybody, the minority contractor in particular. Even my large trade contractor clients who are doing 50, 60 million a year, they've adapted their business plan. And now they only target OSIPs and CSIPs because it limits their cost of insurance. And they can change the way their program is structured, with high deductibles and retention plans. So there's a lot of different things you can do. And when you're out there bidding work and looking for work, you can't just be looking at contract size. You really have to be looking at how is this project insured? Because whatever those requirements are dictate if you can afford to be on it. So, and I put down here, rule of thumb for cost, 13 for 15, up to 15% of volume for GL, workers' comp, and excess. I almost think that's like too low. I mean, I have a lot of clients, 22, 23%. And those particular ones that, tend to be emerging MWBEs who don't have 10 years of loss history that they can show to an underwriter. It's more just, if you have less than 5 years, you're subject to this premium number no matter what. So it's very difficult, but it's manageable. Andis and I have specific examples of people that we've met. The BOC network has actually been working with them also. And he came to us in January. He was coming off, I don't know if he was bankrupt, but he was coming off from, significant financial issues. But he went from zero business in January. He was able to secure an insurance policy in June after being rejected to be offered a quote through 2 different brokers. And he was able to properly, lay out the cash flow and the payment plan to his prime contractor for the insurance policy. And they worked it out. They changed his mobilization costs to include the cost of insurance. And this guy's been operating successfully. He took a small $600K contract. That contract now turned into $2.1 million and an additional $2 million on other projects. So if you can just, properly plan and budget for the work and talk to your GCs or primes about it, they're looking to hire. They have goals to hit. So I feel that more often than not, they'll work with you. Some they won't. And that's just, you're going to have to just kind of gauge that on a case-by-case basis. Some GCs are easier to work with, more flexible, will go the extra mile. Some just never will.
And Anthony also counseled them on how to walk away from work. The hardest thing we have to do, we work so hard at developing new business. Sometimes it's just not the right business. So this fellow, when he got his first contract, his former employer actually said, I'm going to give you a $5,000 contract to see how you do. And Anthony reminded him that would kick off his premiums, which had been deferred for 90 days. And he said, you're going to have, this expensive premium cost the minute you step foot on site. You cannot take a $5,000 contract. And he walked away from it and worked with him on how to include in his contract, exactly as he said, mobilization, which covered insurance costs, regular payments. Is working very closely with BOC to finance his contracts appropriately. And this is the kind of resources when we talked about the risk management available to big firms that small firms don't really always have available, that you should take advantage of all of these resources because it takes a village. And the other thing which we didn't talk about is, and with this escalating insurance cost, is make sure in your bids that you put in for escalation of insurance. You're going to be on a 5-year project. You're going to get a bid from your broker today. It's going to look like a great price, but if you're not covered over the course of the next 5 years, you're not going to be able to go back. So that's the kind of thought process that goes into applying for insurance, but more importantly, managing the costs and liabilities associated with that.
And the other thing to consider, and you're exactly right on everything you said, and is that these GCs know what the price of insurance is. it's not like these prime contractors, they understand the market. When you show them and provide, this is what we see. When you show them and you provide, here are my costs, here's my underwriting information, here's the quote. Once they see that and digest it, they're not going to see that you're trying to pull a fast one on them or trying to jack up your insurance price so you can, make more money on the job. Everyone understands the tough New York market. So, I wouldn't be, the more open you are with them and transparent you are, the more effective you'll be. And, there's a lot. The other thing is that we see is that, like Andis and Roxanne said, that the resources available from these larger companies, they're starting to be utilized more properly for the MWBE. So squeaky wheel gets the oil. When you make contacts at these outreach divisions at these big companies, stay in front of them, give them progress reports on what you're doing, when you expect an insurance policy. The more you talk to them and build that relationship with them, the more opportunities that will come your way. And that's kind of why Andis and I have partnered for this Diversity Assured. We're doing the pre-qual on the insurance. She's doing the pre-qual on the same project. It's just more effective to do it this way. And, we're making direct introductions to the procurement people. Andis, you want to add something?
No, I think that's really it. I think that with the resources in Hall, and to Anthony's point, my experience, the CM does not want to hear on Friday, you cannot make payroll. So having these resources in place, even if you don't need a line of credit or a loan from a CBFI lender, apply for it. Don't close on it, but have those resources in place so that when the time comes, that GC hates surprises just as much as you do.
Yeah.
And so when there are terms that maybe we all don't understand, owner's control insurance policy, OCIP, contractor controlled insurance policy, CCIP, I'll raise my hand and say, define.
Yeah, definitely. And we're going to get into those more specifically now. So, we've identified here that the market is really tough and there's not a lot of capacity. So the underwriters are not writing a lot of business. There's limited to the amount of business they're allowed to place. And there's more submissions than ever before. So you really have to stand out what we call a top shelf submission, or else you're not going to get the time of day. So this here is the insurance industry flow chart. So let's break this down first with admitted carrier. Well, here's the contractor. So this is the participants here on this call, the MWBE. This is the broker. This is my role, TSIB, Aon, Marsh, Willis, whoever your broker is. Now there's two avenues to purchase insurance. There's admitted carriers and there's non-admitted carriers. The typical admitted carriers you see, Hartford, Zurich, Liberty, Travelers, Allstate, the ones that your broker can go directly to. And they write most of the insurance business in the country. Then there is the excess and surplus lines carrier. And that branch of the industry exists to cover the hard to place risks, the risks that the admitted market does not want to cover. So your New York construction risk is basically only able to be covered through the excess and surplus lines carrier. A lot of the times, with emerging businesses, even ones that, I've seen it last upwards of close to 10 years in some instances, but when you're just starting your company and you go, to the local mom and pop broker, you're most likely going to get a BOC policy, a little business owner's policy that combines GL, workers' comp, excess all into one program. It's cheap for the insurance carriers to administer. It's all done through the computers. There's no, people who have to execute that. And it's for, like I said, very small businesses. Those are not meant for New York construction. So a lot of times people start with those BOPs, and then they just kind of quietly grow and grow and grow, and they fly under the radar a bit with the insurance carrier. They fill out their audits, but the carrier doesn't pay attention and just kind of blindly renews the program. So, but everyone here on this call is a New York builder. They are going to outgrow. Eventually, you're going to outgrow that BOP program. It's possible you're in it today. Ride that wave as long as you can. Be prepared for the time when you either go through an audit and they pay closer attention to you and see you're doing a lot of New York work, or you had a big claim, which is the most typical instance. You know, they'll be with that BOP policy for 10 years. They have a claim. Now the carrier's wise to what they're doing and they not renew the policy. They pay the claim, but they don't renew it. You know, or, you know, you just need more coverage that they simply can't provide. So there's eventually a graduation point when you go from the BOP policy to regular GL. And New York, you know, you have to go excess and surplus lines. So that is only accessed through a wholesaler. So now there's the contractor at the top. They have to go to the broker. The broker has to go to a wholesaler. The wholesaler has to go to an E&S market. There's these carriers, you know, the underwriters don't have a lot of say in who they place coverage to. The excess and surplus line carriers, they dictate the box that they will allow, you know, a contractor to be insured by. $1 to $5 million, no roofing work, no New York City work, height exclusion, whatever the case may be. These wholesalers and these underwriters, they can't, like, you either have to fit in their box or they don't really give you the time of day. So it's you have to make sure when your broker is submitting you to that wholesaler for a quote, you have to make sure they're doing more than just filling out an application and sending in $1 million in receipts, $500K in payroll. Here are the 2 projects. You have to sell them similarly to how you sell yourself to win a bid. You know, when you bid on an RFP, those response documents are 30, 40 pages. When we create submission documents to the market, in some instances, that document could be 40 pages. And it has to talk a lot more about just your numbers and your exposure. So if those types of things aren't happening, you know, the broker's never gonna get through to the wholesaler. And that's kind of the other thing that needs to be considered. When you think about brokers in general, there's, you know, I guess 3 types. There's the mom and pop, the local mom and pop shop. There's the mid-market size, which, you know, will be a regional type brokerages, 30 to 50 employees, and they write a lot of business, big service centers, et cetera. Then there's the large, you know, Aon, Marsh, Willis type brokers who really only deal with very, very large construction companies. The brokers at those big firms, you know, who have this type of construction expertise, they don't really take on new business. They have big books of business and they get referrals. So it's hard for, you know, small contractors, and by small, we're saying under $10 million, to be kind of entertained by these very construction sophisticated brokers. So if you're at the local mom and pop shop, it's very likely that the right wholesalers who are writing business in New York don't have a relationship with that mom and pop shop. So, but any broker in the world can access a wholesaler and access any surplus lines carrier. So it's not that your broker can't get there, and they'll tell you they can get there, but they're most likely not putting together a quality submission that's, you know, strong enough to get put to the top of the stack, or they just aren't getting the time of day because the wholesaler is gonna, with his limited amount of capacity that they can write, is they're going to go to the brokers that they've worked with for years. So you have to, it's tough to find, it's tough to get a really strong construction broker with good relationships to work with a, very small business. But there are, there are mid-market firms, there's that have better relationships. So,
So Anthony, you're saying that as a small business, we have to shop it. We have to know who, maybe our neighborhood or our little club member that we play golf with, maybe not be the right insurance broker, but he'll never say. We really need to sharpen the pencil and shop it. And I also heard you say that.
When we say shop, I don't want you to think go shop price. Really, it's like with a simple 10-minute conversation, and there's a slide later that will list a few questions there. You ask those 10 questions, you're going to know right off the bat the quality of just by how they're responding and whether, they're worth time. They're worth time to really work with.
And I also heard you say, Anthony, that is it true that how I answer what scopes of work that I do, because I filled out these insurance policy questionnaires where they're very carefully, very closely peeling the onion on exactly the tasks that my company performs. So while you're doing that, you may think about, okay, maybe the scope of the services that your company provides has to be tailored to what insurance you can get, as opposed to I do everything.
That's a really good point. I think if I had anything to add to that, I think one thing that's really important is to make sure that your broker is a construction-focused broker, and that person understands the New York market, and that they understand your business. So when he goes through your application line by line, it's not, well, maybe 20% of my business is roofing. Well, maybe, I might do work in that community someday in the future. You really have to come up with a thoughtful program that's designed specifically for where your business is today and is inclusive of the work that you have did. An example of a great story of an MBE that we were working with, his brother-in-law was writing his insurance. He started out as a small residential contractor. That's how the policy was written. Thanks for the definition on the business owner's policy, because that was a really important first step. And his policy was written so that he could just do business in Long Island, just doing residential work. And as he grew and expanded, he didn't realize that his work on roofs, his work in outer boroughs, and his work in Manhattan was not even covered. So that's why it's so important to have this relationship with your broker who knows you so well, who will go to bat for you when they're shopping your insurance, so that they can say, well, this company's only 3 years old, but you know what? They had 10 years of experience doing this kind of work before, and this is how they grew and expanded, and this is the measures they put in place to make sure that they would be successful. And you're really riding on the back of that broker's relationships.
Yeah, so you're exactly right. And this slide here, illustrates the elements of a top shelf insurance submission. Again, you can't just fill out the form and submit your numbers. These are the things that at TSIB are staples in all of the submissions that we do. Particularly when the company has less than 5 years in business, because they have to buy, the underwriters have to buy something. They have to underwrite something. So, a narrative of company history and growth strategy. What did you do? Like, I've had clients who were startup businesses who the guy was a foreman in the carpenters union for 20 years, and now he was starting in his own place. So he didn't have any history of insurance, but we were able to get one of the top insurance markets to offer him a quote because of the resume and the work in progress list that we put together for him, that he put together for the submission. So company history, growth strategy, again, imagine like you're responding to an RFP. This is where you sell yourself. Work in progress list is very key. What do you have on the books today? And what does that need to include? Address, scope of work, contract value, payroll. Is the job an OSIP or a CSIP? That makes a big difference. How much, when was your start date? When is your projected end date? You can even build spreadsheets. I mean, we do this for our clients. We build spreadsheets that has their insurance rates tied to it. So, you know, you type in $1 million in hard costs, 500K in payroll, hit enter, it spits out the insurance costs. So these types of tools, just showing this organization and that you can put a presentation like this together goes such a long way with the underwriters. If you don't have these things, they're going to just maybe get to you at the end of the month. So this is what we consider at the minimum. Project pipeline. You know, what are you considering? What are you bidding on in the next 24 months? You don't have to be getting the work, but it's a good idea to show the underwriter, here's what you're thinking about. Here's where the direction you're heading, because they don't want one and done clients. They want to be your insurance carrier for 5, 6, 7 years. Because the longer they have you as a client, that means they're making money on the policy. So it's in everybody's best interest to build a program that can go for multi-years, which is another reason why, you know, we look at the 24-month pipeline. So now when I'm pitching these underwriters, here's what they're doing, here's their history, here's what they're doing this current 12 months, here's where they're going. You know, give us some leeway here on the deductible and some rate savings here, and you'll see here's what they're doing from safety. As we have years without claims, let's get a rate reduction. You got to plant those seeds today in order to potentially get them down the road. And, you know, building that submission is just the start of it, and letting the underwriter know, here's our plan. We are best in class risk. You want to be insuring us. And these are the factors that go into it. And if you have anything to add.
Roxanne, and I guess she had to jump off, has a great story, Roxanne, about the timing of your jobs, why it's important to talk about when they're going to start and when they're going to finish, and how that can impact your premiums and your payments and your cash flow. If you want to talk about, we had a client, MBDA had a client that did everything right, got a great rate on her insurance, had a great business that was growing, put in her bid. I think the timeline on the project was 1 year, and then it got delayed. And she was still making insurance payments every month on that project, and they would not give her relief or a stay until she was able to start again. So,
and, you know, that whole fiasco was born of not having been to a workshop like this to really understand like the whole risk management. And yeah, you're qualified for the policy. Stop there, show that you qualify for the policy, and let your client know that I'm happy to engage this policy the minute you get me a mobilization date.
Yeah.
You know?
Yep.
Okay, I'll continue here. So supplemental application, I'll just quickly show this to you all. This is industry standard, basically. This is when I say just submit your numbers, everyone can see this form, right? When I say
can you make it a little bigger, Anthony?
numbers, zoom in.
Anthony, can you make it a little bigger? Yeah. Yeah.
So when I say just submit your numbers, I mean they fill out this document and they submit the loss runs. That's like bottom of the barrel service from a broker standpoint. And this gets very specific. So if you're not being asked these questions when your policies renew, that's also a red flag. Indicate percentage of construction work performed by you. So what are you doing residential, new construction, remodeling or repair versus commercial, new construction, remodeling or repair. So they want to know a breakdown of each because they're very different risks. Commercial and residential. Residential offers a whole slew of construction defect coverage issues that are excluded from most policies. So if you're doing residential work, much tougher to secure coverage than commercial work.
And in your resume, if you're doing multiple types of construction, in your resume, you should speak to each one of those types of construction that you indicate in your work performed. So if you're talking about commercial work and you're doing 50% commercial work, that's one portion of your resume. If you're doing new construction work, speak to the experience that says you're able to do that new construction work.
Does this apply if I'm, because not the whole audience aren't made up of construction trade contractors here tonight. We do have some shops and manufacturers. So if I'm a tin knocker and I have a duct fabrication, metal fabrication operation, and I have a small shop, I'm not necessarily going to be asked these same questions, or yes, pretty much the same.
No, I mean, they give you the same questionnaire. A lot of the questions will not apply, and you just, you know, not applicable on the app. So it's, you know, in that scenario, they're just very basic stuff. They'll want to know information about the property, the warehouse, or whatever facility they're operating. How much material is running through that shop on a regular basis, and what kind of labor, you know, costs are included to it. So it's definitely simpler and more available than it is for contractors insurance. So there's no doubt you'll get more options. Like as a manufacturer or that type, you know, your broker should be showing you two, three options every year. On a contractor side, it's hard to just get one option. So that's kind of how I compared the two. But yeah, so this is, and we'll send this application out. This way you have it and can look at it. But really, they just want to get specific details on the type of work you're doing, where you're doing it, you know, gross receipts, 4th year prior, 3rd year prior, 2nd year prior. You got to track this information properly. And if you can put it together in a neat little spreadsheet that shows that you're organized, more bonus points. The more you show off, the better. That allows the underwriters to check more boxes. So just, you know, we see a lot of the times these numbers are just very casually reported. And there are strategies to, you know, you're going to do $1 million this year. Maybe you only want to report $700K up front and pay the rest at the audit. So there are conversations to have around what numbers you put onto this. But step one is filling it out, you know, correctly and having a discussion about it with your broker. And
Anthony,
yeah,
sorry.
but
So you talked about adding a very nice spreadsheet. So can you add supplemental information to your application?
yeah, I mean, this is just, these applications have to be filled out and submitted so they can check a box. They won't issue a quote unless those applications are in there. All this other stuff, that's done by brokers. They have to put that, you know, in conjunction with the contractor. Together, they put this RFP type document together that goes out, submitted to the market. Okay.
I know we've been talking a lot. Does anybody have any questions? Is there anything
that's
that we've
kind of
talked
the transition point. So yeah, we'd love to open it up to anyone who had specific questions. I can't see anybody on my screen, so I don't know.
Right, I can't see anybody, but you know, there's certain questions that I'm sure everyone's thinking when you said, if you think you're going to do 700,000, but you may do $1 million, maybe you put the 700,000, and then you'll get picked up on the extra 300,000 on the audit. So that's like a trigger. That's like a red flag. So does that mean that the more business I anticipate doing, or what I write in those boxes, is really going to help determine what my insurance premium is going to be?
We'll get into this more in session 2. However, the answer is it affects your rate. So typically, the more receipts you report, the lower your rate will be. Because in New York, there are minimum premium levels, meaning that if you're doing 100,000 in revenue or $1 million in revenue, they're still charging you 100 grand. You know, I'm making that number up, but they're still charging you that. So if you've got 100K in sales, your rate's going to be 10 times higher than it would be if you had $1 million in sales. So the amount of exposure you report directly impacts the rate that they give you. And but at the same time, you know, if you're over those minimum requirements, it's not a case-by-case basis. You have to evaluate it on each scenario. You could have less of a less down payment. If you report less, your rate will be a little bit higher, your down payment will be less, and then at audit, you know, you kind of make up for that, what you saved on the down payment. So it's really just a cash flow thing. I would always recommend that you get your rate as low as possible and report the correct amount. But when companies are just getting started, and you know, the first 6 months in particular are really tough when there's delays and you sign the contract in July, you don't get onto the job until October. So that might warrant you to play with those numbers a little bit. So it's just things that should be discussed. These conversations should be had on a regular basis. And, you know, unfortunately, far too often it's not. People are just very quick to sign a contract and then deal with the insurance afterwards, which is dangerous because then, you know, you go in there and you bid at one number, then you find out it's an extra 30% higher because you don't have the right coverage. And then the GC, the prime's looking at you to fix it, not increase your cost. So it's very difficult out the gate in this market in New York. It's a lot of upfront cost. But I'm optimistic about it because when you talk to the primes and the GCs and explain it properly, they understand. So I tend to believe people are more often better than they are not. So perhaps that's a bit optimistic of me, but I think they'll work with you a bit if you present it properly.
I think also one of the things that's important when you're talking about how you're presenting your early numbers, and because there's so much unknown in the beginning, and you never know how a job is going to start and finish. One of our contractors now is reaching out regularly to say, now I have this much work, now I have this much work, because that will impact the amount of his audit, and he's in preparation for putting aside that amount of premium increase that's going to happen as a result of his work. You can't just say just because you didn't, you know, it wasn't included in your original plan, it's going to come back and you're going to have to pay for it. Anthony, we have a great question here from Ash Contracting with respect to shopping for insurance and the different brokers and their abilities to get the best policy possible. Is there a method to do this? Because if you start submitting applications through different brokers, it can hinder you since there are only a handful of wholesalers in the New York market. All the brokers are always saying they have great access to carriers, but you really don't know until you go through the application process.
Well, here's what I'll say. If you're a large business, and by large business, I mean, if you're doing more than $1 million in construction work in Manhattan, you are most likely in the E&S market. You know, the proper way to select a broker, I don't like saying shop, but the proper way to select is, you know, 6 months prior. And you can do a fire drill and do this and just speed this process up if you really need to. But 6 months prior to your renewal, select 3 brokers and, you know, that you want to have them compete for your business. Have them come in, meet with all of them, talk about your business with them, with the history, have them ask you questions, and then they come back to you 2 weeks later and they each submit a marketing plan. Here are the markets I'm going to go to. Here's the type of program, you know, and I wouldn't even suggest these things to them. I would just say, I'm inviting you in to compete for my business. You know, when can you come see me for an hour? Let them drive the show. You don't want to put ideas in their head. Let each of them come to you and present their strategies. provide the information they need, and then they'll each tell you, what markets they want to go to, what programs they think are a good fit for you. At that point, you can just make a decision. I like this broker the best. They're definitely the ones for me. And then it's not a price thing, because there's very little to be done about price in New York. The way to control your price is to control your claims and prevent them from happening. Like I said, these rates are dictated at a very high level, far above the underwriter who's writing your policy. They just, they have rates that they have to issue. There's very little movement. They're not going to lower the rate because they like you. They're going to offer you a quote because they like you that consists of their rates. So, and every wholesaler, any broker can go to any wholesaler. So everyone has the same markets. It's more important to know what their strategy is, how much construction premium they write on an annual basis. You can just pick up the phone and call your current broker and ask them these 4 or 5 questions, and you can tell right off the bat if they're stumbling, if they're fumbling, if they've thought about this before. It'll be very clear, instantly, because if they don't know the answer, they'll be shaking in their boots. So you'll be able to tell right away if they, have the chops or not to really work for you. But when I think about how to select a broker, who is my 3 to 5 year partner? And if you're a company, because we've received questionnaires from not all the respondents here today, but a large majority of them, I know from looking at these numbers that you're paying 300, 400, 600K for insurance. If you're in that boat, you should no longer be in the traditional marketplace. You should be looking at multi-year programs, rolling programs, captive solutions. Captive is, let me just jump ahead here for a minute.
And while you're looking ahead, Anthony, I just want to, there was one more question. Do you get a better rate when you construct as a construction manager, or when you're at risk?
You'll get a better rate as a construction manager, but you have to pay very close attention to your subcontractors. Let me just wrap up that last thought here before we get back to that question. So, these types of programs here, self-insurance, captive, multi-year in particular, traditionally, industry myth is that they only qualify for, the Skanskas of the world, the Lend-Leases of the world, those monster companies. That's no longer the case. The market is so difficult and tough, and prices have increased, that now if you're paying 300K a year, you can enter a captive insurance program where you become an owner of the program, and you can receive dividends for performing well, meaning not having any claims. So when you're selecting your broker, don't select on price, select on where they can take you in the next 3 to 5 years to manage everything, and the advice they can give you, help you evaluate risk on projects you're bidding. These strategies that we're discussing, this is the type of insight you should get. It seems like there's more questions.
There was one more thing that's really important that I want to talk about. When you have a good broker and they have a good database of subs and contractors that they are already insuring, they can help you evaluate whether or not you want to work for a contractor. If he's got a bad loss history, or if you're looking for a subcontractor, ask him about historical information about new prospects, new clients, and new subcontractors.
Are there other questions, Andis?
Yeah, the other question was, do you get a better rate? Oh, the construction manager at risk model, you said you'd come back to it.
Yeah, I mean, if you think about construction manager versus self-performed, is that what it said?
Yeah, it's a construction manager or manager at risk, a GC or a construction manager at risk.
If you're holding the contracts with the subcontractors, you are at more risk than if you are not. So if you're an owner and you hire an owner's rep, but the owner holds all the contracts with the subcontractors, there's very little risk on that owner's rep who's like who's not at risk. So yes, if you're at risk, you will get a higher rate, but they're pretty close. GC and CM are pretty close across the board. It all comes down to you have to thoroughly vet everybody. And I'm not just talking about the prime contractors. You can't, I mean, hopefully you're hiring ones that are, vetting their subs properly. But if they miss something on their lower tiers, that's going to come back on you. So if you're a GC and you only vet your primes, I'd be careful about that. That's very risky.
For the sake of engagement, could we invite the attendee to speak?
Yeah.
Yeah, so let me see if I can, would now be an appropriate time maybe to come up for air a little bit.
Perfect.
And, allow attendees to speak. So Carter, you have the capability to unmute yourself. And what I think I'll do is, if anyone would like to join the conversation, raise your hand. If you can see the button where you can raise your hand on the Zoom, then I can give you capability to unmute yourself and ask a question. Carter, it looks like you've unmuted. Why don't you go ahead and clarify, because I know you had some follow-up questions as well.
Well, no, I don't know if you can hear me.
Yeah.
But one of the things that I was trying to get a better understanding is, as you talked about too, so the more controls you have, the more system applications, the more programs that you can put in play, that's going to allow you to be able to demonstrate to the broker or to the company that you have more management controls, more systems, whether they're programs or people that's overseeing and watching the process. That will allow them to understand your ability to manage and control, as to understand your subcontractors, to understand the follow-up, making sure that people are doing things on time, they're going to meet all the criteria. Shouldn't that demonstrate also an ability to get a better risk, better overall insurance, because you have a better control?
Yeah, absolutely. No question about it. I mean, these days, that's almost a requirement. So it's like I was saying previously, these things used to get you better rates. Now it just gets you an offer. So it's hard to just get offered coverage if these types of systems aren't in place. And when I think about these systems, these controls, when you create that narrative to give to the underwriters, it has to all be about loss prevention, loss avoidance. I looked at this data, which showed me these were the claims I was beginning to have, so we implemented these programs. Or here is my incident response report, which if there's an accident on site, all of my people fill it out, and then we have a safety meeting to say, how do we prevent this from happening again? So that, I think, is those types of, they seem very small, and like toolbox talks are great, but having like an on-site post-claim conversation that is documented, that you can show the underwriters, it's a great habit to build to keep your losses in check. And it's just more brownie points that you gain, with underwriters.
I know we have a couple of more slides that are important, that just going to shore up some of the questions that we've asked today. So if you can, Anthony, perhaps move on.
Yeah, I can go back to the PowerPoint. If there are more questions, we can pause again. Just let me know. Okay. We're wrapping up here, just so everybody knows. Okay, so insurance requirements working for a GC. So there's two types of insurance: traditional risk transfer, where you're signing these heavy contracts, and there's OSIPs and CSIPs, where there's one insurance policy that everyone participates on. We'll get into those in more detail later on. The insurance requirements for each are the same. There will be some slight variation. They might require a 1-2 instead of a 2-4, but generally they're requiring you to have 2-4 limits. Workers' comp are standard state limits offered by the state insurance fund, and a $5 million excess tower and hired and non-owned auto. Now, a lot of times I hear a lot of pain from the emerging, small business. This is too much coverage for me to have. I shouldn't be required to have this. These requirements are the bare minimum that you shouldn't carry less. Like it's in your best. I get it. It's a price thing. You have to be able to afford it. Sure. But forgetting about price, like you need to have workers' comp. You need to have a GL program. And with these claims in New York, and every day people are falling, pipes fall on people. It happens every day. One of our clients every day will have a significant claim come through. And you're going to want, you're going to need those limits when that does happen. So I understand it's very expensive and some people can't afford it. But they're not ridiculous requests by these GCs. What I'll tell you is that on the excess side, you can definitely push back. These are, especially when it's an OSIP. When it's an OSIP, they require you to have this coverage in the event of an off-site claim. So the OSIP's policy will cover, the entire Jacob Javits Center, for example. But if your employee has to go to the hardware store or goes to lunch or whatever, and has to leave the site for some reason and has a claim, the OSIP doesn't pay, your policy pays. So it's very unlikely that scenario is happening. These guys don't really leave the site often, but that's the reason why it's there. So I see all the time, and not even just MWBEs and small businesses. I see $50-60 million contractors who tell the GC, I can't afford this excess. I can only afford $1 million in excess. And they waive it. It all comes down to, do they trust you? Do they think you can do the job? Do they want to work with you? And that's why, these types of sessions where we get to know you and Driscoll can get to know you and be more comfortable. So now you're just not a bid on the stack of a pile. There's a relationship there. So when when this session does, when this seminar does and finish up, make sure you connect with Andis because she's working for Driscoll and will do what she can to get you contract opportunities. So yeah, like you can push back on these things. Don't let them bully you is the message here. Come there with your facts, with your numbers, and just they will waive it. It happens more often than not with my clients.
We got a great question just from during the registration from Bottom Line Construction. Anthony, you want to talk to Alexis's question about do you need to have that $5 million tower to participate on an OSIP? And what are some opportunities that you can have to sit down with the GC and rather than just add it for a job that you may or may not have yet, talk about other strategies where you can negotiate scopes that could be timed to be more consistent with live jobs?
Okay, great question. Couple parts. So the first part, some insurance programs, some OSIPs might say you can't get on the site unless you have X, Y, and Z. But at the end of the day, the decision is entirely in the GC's hand. So it really comes down to what I believe is finding the right GC who, is willing to work with you. That's a reason why we're trying to, push for more OSIPs within city publicly funded projects. They don't really quite allow it all the time. So we hope to see more of it in the future because they would be willing and they understand $2 million is plenty of coverage if you're on an OSIP. You don't need the 5. So in my opinion, you can really, it's not like the insurance carrier is not going to let you on or not pay for the claim if you don't have a $5 million umbrella. It's literally all in the GC's hands, and you can get them to say, you're good with the 2 million. I see it all the time.
It's
Actually-
difficult to negotiate with the GC in the pre-qual process. And you really have to get to that next level. When you're at the level of the pre-qualification, it is difficult to be in that position. But the more you know, and if you can speak this language, you know, if you can be prepped by your broker to have that conversation.
Your broker should be on the call with you. They should be on the call with you, because just so everyone knows, brokers get 10% of your premium. That's their pay. So when you're paying 100K one year, 200K the next year, 300K the next year, and they're just blindly renewing your policy and getting raises, they should be at this meeting with you and explaining your payment situation and your payment plans. How else are they earning your money? By cutting certificates of insurance and sending you bills? There needs to be more demanded from your brokers just across the board. So they gotta be able to have the knowledge to have these conversations, and they should be willing to do it, because if you get that work, your premium goes up because your exposures go up, so their commissions goes up. So they're aligned in this. If they're not doing it, it's because they probably can't have the conversation.
You know, and I misspoke that question because it was exactly about pre-quals. And Anthony had a great response. You know, go in with your broker. Your broker will say you qualify for $5 million tower, but you're not going to implement it until you're awarded a contract.
Here's the quote. Even get the quote before that meeting.
One question came in, Anthony, another one from Ash. I've seen primes wanting to deduct money from your payments as a deposit into their safety program. This doesn't sound okay. What would this accomplish?
That is an odd request. Can you say that one more time?
Primes wanting to deduct money from your payments as a deposit into their safety program. I haven't seen that. And if it's not in your contract, the answer is no.
I think you said his name was Ash or the company was Ash. Can they come off mute and elaborate a bit?
Sure. Praypon,
Sure,
can you unmute?
Give me just a sec. I've got to,
While he's doing that, you know, there also, if there are minority certifications involved in that project and participation, there are other questions that come up and red flags when they're asking the minority contractor to give back money for anything.
I just don't understand what the safety program is. It sounds fishy. So my gut would say, don't do the job. Go find another job. There's so much work out there. You know, be selective with who you choose to work for.
Hi, good evening. Yeah, I was the one who asked that question. And that's exactly what happened. We walked away from that contract. You know, that was part of the contract that they put in, that they wanted to deduct monies each month to put into their safety program. They're saying that all of the subs signed this contract, they have no problem. But I mean, I didn't go along with it. It's just right, especially when I have all of the insurance requirements and, you know, everything. So I am just really not sure how to, and how do you elaborate on that? Like, if you deduct money from all of the subs to go into a safety program, then what
Was
does
it
that?
was it in the RFP that this was going to be a fee that was required? You could have added it to the bid and say, this is to cover the safety program, another $10, and you put it in the contract proposal as part of your contract so that you're billing them back for that, but not at the end after you've.
That's what I was going to say. I've seen, you know, instances where the project was underway and then the owner decided to add safety technology to the project. It wasn't crazy expensive, but they did like add it to the cost of the contractors who were bidding it. So, but your instinct was right. And I always tell these emerging businesses, they're just so quick to sign a contract because they want that big number, you know, they want to get started, but it's just you got to really be careful and patient. And Andis and I see it, and even the BOC people as well. The contractors are coming around. There's a lot more pressure on upper management to, you know, do more than just hit their goals and do good faith efforts, to really build new businesses and not just hire the same MWBEs. So we try to, you know, and that's a portion of what Diversity Assured is about, which is what the program Andis and I put together, is building that network of quality MWBEs who can execute work and are reliable, and then the good prime contractors and GCs and owners who work properly and provide resources to help you grow and sustain. And frankly, now all these RFPs for big public projects for the GC, it's now in their language. You know, what resources are you going to provide to MWBEs? That's now a portion of their response before they even get selected. So I think there's going to be more of this and more help on the way in the upcoming years. They know the insurance costs are crazy, and it's the biggest, it's, you know, probably the biggest roadblock besides for maybe relationship building, you know, to participate.
Yeah, we don't have to tell you, bonding, insurance, and financing.
Right.
It's the hat trick of risk.
Yeah,
Okay,
are there more
go ahead.
questions I should answer? I mean, we're cutting it close on time here, so I'm happy to keep going and stay, answer more questions, keep presenting. It's up to the audience, I guess.
Did you want to go to the next slide?
Yeah. So this is just outlining contractual risk transfer. So if it's not an OSIP or a CSIP, this is kind of what's happening. So everyone has their own insurance policy, owner, prime, sub, second tier. In the owner's policy, and because of labor law, the scaffold law, third-party action over exclusions, these are all the same things. They're called a lot of different names. Only in the state of New York, and this dictates absolute liability no matter who's at fault. It's problematic. And the owner's policy will say, if an employee from the second tier contractor gets hurt, the sub gets sued, the prime gets sued, the owner gets sued, everybody. The owner cannot pass the risk down the line to the appropriate party unless everyone's policy underneath has the same exact language as the owner's. So now the owner with all the money, who has all the bells and whistles, you are forced with no money to participate, to meet those requirements. So on a wrap up, on an OSIP or CSIP, there's room to push back on an excess policy, on hired and not owned, and say, I don't need these things, or I need less limit. But with contractual risk transfer, there is no wiggle room. It's going to be really tight. You know, you'll run into the occasional owner or prime who just doesn't care about insurance and just, you know, takes the lowest number. They will ultimately go out of business, but most of them are going to be very strict, and there's very little wiggle room all around. So I advise my clients to only target SIP insurance policies. So here we'll quickly get through SIP versus traditional insurance, contractual risk transfer. So owner-controlled insurance policy is an OSIP, contractor-controlled insurance policy is a CSIP. So what's an example? World Trade Center, or, you know, the Jacob Javits Center is owned by the city. Turner Lend-Lease is the joint venture, who's the GC. They would put a CSIP together that they are the sponsor of. If Javits Center decided they wanted to do an OSIP, they would do an OSIP, and then Turner and Lend-Lease and everyone else participate on it. So the difference is only who's sponsoring the program. The advantages, better coverage. So now you don't have to worry about what that third tier Contractor's policy says on page 192. Everything, there's only one program. It's got all the bells and whistles. There's less paperwork. There's better pricing. These days, any project over $150 million is crazy not to be an OSIP. So in the future, all sponsors should be going in this direction. More importantly, how does it benefit the sub? Mainly, the exposures do not count towards the premium you have to pay. If you're doing $5 million a year in work, $2 million of it is traditional risk transfer, non-OSIP stuff, and $3 million is OSIP stuff. You are only paying for the non-wrap-up work. It significantly reduces your cost. A strategy that I think is extremely valuable is if my highest performing clients and that doesn't mean they do a lot of work. It means they're profitable and spread their risk properly. They have 2 insurance programs. They have one insurance program for their wrap-up work, which has ultra high deductibles because they know any claim will not hit their policy. Therefore, their premium is very low. And then when they do have a large non-wrap-up opportunity, you insure that through a project-specific policy. These strategies we see at TSID work very effectively. And if you're kind of in between that, I'm not an emerging business, I'm somewhere between 10 and $30 million in revenue, you can go to a captive today if you were kind of savvy enough to do so. But it generally takes about a year to go through that underwriting process for a captive. But that's where you should be heading with kind of this in between. And it works best when, you're doing just as much wrap-up work as possible. So seek them out.
Anthony, can you describe what a captive is? Anthony?
Yeah.
Can you describe what a captive is?
Captive is future of construction insurance. So this is kind of where I see where TSIB sees, the market going. More SIPs, less traditional insurance. Again, anything less than 150 million, over 150 million has to be a SIP in New York. And now if it's like over 50 million, it qualifies for particular types of SIPs. So we're going to see them continue to take off. Big contractors, owners, they make a lot of money on it when they control claims properly. Another advantage for the subcontractor, these SIPs have robust safety programs because the total cost of the SIP is dependent on the amount of claims. So utilize that and learn from the Turners of the world how they manage the risk. You see how they do it and translate it to your company. Multi-year programs, if I know there are some people on this call who are doing over $20 million a year. If you're going to do 150 million in a 4-year span, package it together, go buy that insurance at the same time from the market. You got to be really sure you're going to do that work, but if you can buy in bulk, that's what the big players do. And people who, are doing really well don't think that's really an option for them. Captive programs are what I personally am most excited about. It's just non-traditional. So you don't deal with anybody, no wholesalers, no E&S markets. You are the insurance carrier. So there's individual captives, which are meant, let me take one quick step back. To create a group captive or an individual captive, you need to have 1.5 million in premium, annual premium across all your lines of coverage, GL, auto, comp, whatever. So if you wanted to start your own individual captive, you have to be paying at least that much money. Or you can enter a group captive that exists today, which you can enter with as little as 300K in premium. The third option is to create your own small group captive. So if you have a really tight network of friends that you work with on the same jobs all the time, and you've known each other for a long time, you all have this insurance paying, and collectively you're paying $2-3 million of insurance together, you can go create your own insurance carrier. You fund it with your own premium. So instead of paying Colony, Hartford, Zurich, $2 million a year, you pay your own insurance company that you own that money. You get tax dividends, deductions when you pay those premiums. As the captive grows and you're in year 3, 4, 5, 6, you get dividends returned back. So in year 1, you paid 600K, you had no claims that year, you can get 400 of that 600K back into your pocket. So if you're running a large trade contracting operation and you are heading in that direction where you're paying $1 million a year, which is not far off if you're paying 400K today, particularly in 2021. So, start learning this world. It takes a minute. Like I said, on a quick basis, it takes a year to really learn it and find the right vehicle for it. But even within TSIB, we're making massive investments on the reinsurance and creating our own captives, because we believe that's where the market is heading, SIPs and captives. So they're no longer just for large companies. Start learning about them now so you can implement it in 1, 2, 3 years from now. And focus everything on loss control and technology, spreadsheets, track your jobs better. All the more data you can provide to the underwriters, the better. And expand on the broker services. Demand more. This is this little pie chart here. Traditionally, people get their policies renewed every year, and then they get these expected services. Cut my certificate, file my claim. Stops there. You need more than that. Preventative strategies, consultative services. Help me talk to my GC and my prime. Usher me into the captive world. Connect me to your prime contractor client so I can get work. New York insurance is so expensive. They should be doing more for you. And, I even look at myself. I've been a broker in New York construction for 12 years. If we talked in the first 4 years of my experience, we couldn't have this conversation. All I could do for you is submit your application in and hope the computer gave me a good number and you liked me enough to give me the business. And then I would just pray you wouldn't call me until the next renewal. Then I graduated companies. I went to a bigger firm, which gave me more services. But ultimately, I ended up at TSIB because it's just completely construction focused and there's more we can do and teach our clients and connect them to work. So, these are some questions that I think will go a long way in determining what your broker is capable of. What is your marketing strategy for my upcoming renewal? What are the top 5 carriers you are placing construction with risk? I don't know. I did one. I got to check my numbers. They should know this right away. What optional risk financing strategies do you recommend for my business? Maybe they don't have one that fits your business today, but they should at least be able to give you some strategies if you say, this just do they even have an answer in there, or are they just stumbling? How much construction premium do you place annually? Can you make meaningful introductions to grow my business? Do you work on OSIPs or CSIPs? You're paying them for your work, for their services. Get services from them. That's it.
And if you don't know what questions
I really,
to ask,
I have to appreciate you know, you, Andis and Anthony as well, because honestly, this is uncharted territory for most business owners who buy this insurance unwittingly, don't know what to ask, have no idea what it is when they get it, and until there's a claim, really don't really have an understanding of the whole process. So we appreciate, we don't usually at MBDA, and I have to say, we don't co-sponsor events with non-minority companies. This area is such a high value area in terms of what the dollar per dollar that every company is spending on this, that is why, and also, you know, Andis and Anthony are trusted partners, but it is such an important and highly, just an expensive thing that we are all paying for. And it's great to have this information. You are better armed when you know these definitions and can sit down with your broker and have a logical conversation. So thank you.
And also, we appreciate your having us today, Roxanne. And although we don't fit, you know, the typical presenters, we just want you to realize that we're here as resources to you. MBDA is my client. They pay me to help you. Reach out to me if you have any questions. Reach out to Anthony, regardless of who your brokers are. We're here to help you because growing qualified, capable MWBEs makes everybody's job easier, and it's the only way we're going to make this program successful.
Yeah, and you know, we put this seminar together, like Roxanne said, we've been having success. These strategies paid off for a handful of startup minority businesses, service-disabled veteran businesses earlier this year. I'm happy, we're happy to connect you to them, to talk from them and hear from them about what worked. So that's why we really put this together. I've participated in a lot of insurance classes, and it's a lot of just, it's important to know, you know, what your policy covers you for, and additional insured and whatever. But as business owners, it's more important to understand how to get the right program and what's out there for you, not just what these coverages are. The GCs, the owners, it seems like a lot, but honestly, what they're requesting is in your best interest. And not having that, you know, opens up more risk to your company. So it's expensive. You might not be able to afford it today, but you need to be creating a plan, you know, on how your insurance program is going to grow, you know, as the business does. So we're here for you. We'll send out an email tomorrow with just the copy of the PowerPoint. We'll send you that supplemental application so you can see it, our contact info. There'll be a link in there where if you want to set up a call with me and Andis, you know, to talk for 30 minutes, we can review your stuff and, you know, answer any individual questions you have. We're happy to do that. And if there's anything specific you want us to get to for Thursday, let us know. We'll put it into the presentation and we'll, you know, get to it. And then next Tuesday, that's when Driscoll will be here and you'll hear from them. So we appreciate the time and looking forward to continuing to get to know you all.
Just to add on to that, thanks, Anthony. Definitely keep the questions coming. It's been great. And we'll circulate that PowerPoint. Everyone should have my email. I've been sending reminders about the event and everything. And so really looking forward to Thursday night. I mean, this is a college level, graduate level information. So, you know, I can't thank MBDA, you know, and all of our partners, TSIB and Andis, and Contractor Compliance as well. And so, and thanks everyone for attending. We started with the same number of attendees as we're ending with. And so that is a good sign. I think that is definitely a positive sign. So we'll keep this momentum going, and I hope everyone has a great night, and see you Thursday.
Thank you.
Thanks very much. Thanks, Ryan and Quincy and Roxanne, of course, Lauren, and all of the participants tonight. You made the show great.